Stocks trade ranged after a sell-off on Monday following Powell's indication of gradual cuts and a rise in tension in the Middle East, even as China eyes a recovery ahead. IT and capital goods are prominent gainers, even as metals and realty track.
Being a top private bank is Kotak Mahindra's rightful position, says CEO Ashok Vaswani, who eyes significant market share gains following the successful implementation of RBI-directed corrective actions. He expects the bank's network to expand to 3250 to about 35 branches in the next 3 to 4 years.
After a heady September that has seen Bajaj Auto emerge as the number 2 in the EV two-wheeler segment, the company is now confident of wresting the top spot given the strong momentum and its new product pipeline.
The Reserve Bank of India has spotted deficiencies in adherence to prudential norms and in business practices of several gold loan providers. The regulator has given lenders 3 months to set things in order. Analysts see limited impact for large gold financiers.
And market regulator SEBI introduces a new product to bridge the MF-PMS gap, eases rules for investment advisors, investor nominations and debt issuances, allows market trades using UPI, gives mutual funds a light option but widens the definition of connected persons in insider trading, a concern for many.
You're watching us here on Halftime Report. I'm Manglam Malu. With me, as always, Ekta Batra. It's an interesting day of trade so far. As you can see at the top of our screens, all the major indices are back in the green, but not after being in the red for most part of today's trading session. So it's been a fairly wobbly market. As you know, the intraday chart of the Nifty would tell you that we started well in the green. At one point, we were high by almost 80 odd points as well. Thereafter, we sold off. For a brief period, we were lower in today's trading session, and thereafter, we saw a bit of a recovery, and now making an attempt once again to stay in the green. What's actually doing better is the Nifty Bank, which is hovering around levels of 53,000, and the Nifty Bank will be the most important index to watch out for today as well, because along with the Nifty Financial Services, we have the Nifty Bank Expiry 2 playing out today, largely because tomorrow is a trading holiday. The mid-caps doing fair better than the frontline indices. We have nearly 2 stocks advancing for one which is declining. So the lines, while coming close to each other at one point in time, have now moved back again with the green much above the red one.
Okay, all right. Yes, Manglam, overall, as of now, you can qualify it as being probably a little bit of a quiet session for us. The markets are consolidating after that broad-based selling that we saw yesterday. Just keep an eye out on the macros. We have the IIMA survey, which is indicating data with regards to inflation going ahead. So do watch out for that. But separately, we had the core sector data for the month of August, which contracted 1.8% for the first time in 42 months. We have auto sales in focus. Till now, M&M Auto, Bajaj Auto, Escorts have been above estimates. And what stands out is probably the advance decline ratio in our market, which is still on the advancing side. So let's see whether we manage to sustain that or not. Also, the internals for some stocks are still looking good. So, for example, Balrampur Chini, Sri Renuka are at the best levels that we've seen in a year, along with even Tata Communication as well as Metropolis. So that seems to be the key point, that there are some stocks which are managing to gain. Macros continue to be in focus, and obviously the global space. But let's kick off the show with the CNBC-TV18 exclusive. The MD and CEO of Kotak Mahindra Bank, Ashok Vaswani, says growth and transformation of the bank is the mandate which is given to him. He also reiterates that the bank is regularly engaging with the Reserve Bank of India in an effort to lift restrictions as soon as possible.
Kotak is a great brand. Kotak is a great platform. There's no reason why Kotak shouldn't be within the top 3 private sector banks. And I'm talking not only of the bank, I'm talking about our subs. Where our subs are within the top 5, why we can't be within the top 3, or just full stop, be within the top 5. Right? Growth and transforming for scale is exactly what this mandate is about. India has the best digital public infrastructure compared to any other place in the world. I've worked in every other place in the world. I've never seen anything like this, right? Now, obviously, that has led to the demand for digital services having gone up dramatically. And it's about the bank systems having to keep up pace with that. So we've been spending the last couple of months really focused on how we grow and make our systems foolproof. So we've taken this as an opportunity to really say how we'll really leapfrog and make our systems really resilient and relevant for the days to come. So I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI, sometimes even every week, updating them, getting their guidance, making sure we're on the right path. And I think we've made tremendous amounts of progress. It's not unusual for deposits to drop off in the first quarter because you normally end March on a pretty high. Frankly, I've worked in the US, I've worked in the UK, and deposits have pretty much stayed flat as a percentage of GDP and continued to grow all over the years, right? And there, obviously the participation in the capital markets is much, much, much higher than in India. So this notion that suddenly, there's going to be a complete dearth of deposits and everybody's going to invest in the capital markets,
Overdone?
I think it's overdone, right? And I think that, look, as long as there's an economy, as long as there's expenditure, as long as there's businesses, deposits will continue to kind of go. Is the customer becoming more sophisticated and savvy? Absolutely. And that's bound to happen, right? But I don't see this situation as suddenly deposits are going to suddenly disappear.
Interesting, insightful commentary coming in out there from Ashok Vaswani, the MD CEO of Kotak Mahindra Bank. Remember, you can catch the entire conversation tonight at 7:30 p.m. only on CNBC-TV18. Right, let's get back to the markets right now. The Nifty is giving up some of the gains that we saw from the lows, still holding mildly in the green, but just about so. It's the first of the month and auto stocks are in focus on the back of September sales data coming in from, all the automakers. We've had a bunch released so far. So to give us or get us up to speed, we have Vinny joining in to tell us what she made of the numbers so far and what the trends are.
Good afternoon. So in terms of trends that we're talking about, so far so good, at least it seems like in the numbers that have come in. M&M Auto overall has managed to see a good set of numbers for the September auto sales, above what the street was estimating, while M&M Tractor is just in line. So the tractor segment is just starting to see a recovery because rainfalls have been better. So yes, there is hope that second half of FY25 will be better. That's what the management of M&M even told CNBC-TV18, as well as Escorts Kubota. When you look at their numbers that came in for September, they saw growth of 3%, which surely did beat the street estimates, but they also too highlighted a similar trend that second half is going to be better. For tractor segment, we will be expecting good numbers in terms of volumes coming in for the second half of the year. Two-wheeler segment, we have Bajaj Auto that reported its numbers. Good set of numbers in terms of the sales for the September month. They saw a growth of 11% on a year-on-year basis, while a 34% growth even on a month-on-month basis. So yes, we have seen the growth momentum continue for two-wheelers. And the management of Bajaj Auto also spoke about the 6 to 8% underlying growth that will be continuing for the motorcycle segment in the month of October. Let's not forget, for the auto segment in a whole, the festive season is something that everyone is watching out for and expecting these volumes to be much better. So yes, October, November is what we're keeping an eye out on in terms of better volumes going forward.
Okay, all right, Vinny. Thanks very much for that. Some news on Jubilant Food, where there is a tax demand on account of certain transfer pricing adjustments. And we'll try to get the amount. The company is going to appeal the tax demand order before the Income Tax Appellate Tribunal. It's got a final assessment order for FY17 with regards to a tax demand, which is around 71 odd crores. The stock, as you can see, is under pressure on the back of that news, down around 3 odd %. But let's...
We'll just have to watch out for a couple of things, whether there is any settlement coming by out here or not, or does the company have to go ahead and pay it? Because 71 crore by itself is a small amount on an absolute basis. But if you look at the EPS of the company, right, it's roughly about 20% of the company's profit. So if it does go ahead and have to pay that 71 odd crore rupees, then will that be taken off the EPS? Does the company have provisioning for that or not is the big question that we'll need answer to. And add to that, if you look at the stock over the last 3 months or so, it's already seen a rally of almost 30-40% from the lows. So on the back of a rally that we've seen in the stock already, some weakness that we're seeing in the market, and add to that a 71 crore tax demand, which amounts to roughly 17 to 20% of their EPS, has resulted in the stock declining. So it will be very interesting to see what pans out in this.
Okay, all right. So this is probably a story to track. Jubilant Food Works currently at around 661 odd rupees, down around 3 odd %. But moving on, and in fact going back to the auto space, earlier today we did catch up with the management of Bajaj Auto and M&M. listen in to what they had to say on their sales numbers.
Steady improvement in Nigeria and also, of course, in exports. October to December is a slightly better period in Nigeria. And that contributes to a steady upward growth trajectory for exports as a whole. As we've been saying, that month on month, we expect to see about a 10% improvement in exports. That's what we've been clocking. And I think that hopefully should continue.
First of all, I mean, we are seeing very strong momentum in the market, and clearly this is on the back of some very good rainfall. Of the 36 agri-climatic zones that we have in the country, 33 zones have got either normal or above normal rainfall. And even in terms of, if you see the state stratification, for only the states of Bihar and Punjab do we see little bit deficiency in the rainfall, but broadly all the agri states also have very good rainfall. In terms of revising the guidance, no, we will still maintain at 5% level because we want to see through the festive season and then maybe take a call at the end of Diwali. That would be our view. But most of the heavy lifting will happen in H2 of this year, and that would give us an overall 5% growth rate.
All right, that's the management of Mahindra & Mahindra. We're giving you a roundup of all things auto. But you know what? If you're traveling and if you're in the car, etc., you can get all of these updates on your phone itself. And that's the good news that has come in for you viewers. India Business Leader, News Leader is now just a click away. We're introducing to you CNBC-TV18's all-new app. You've got to get instant access to all the breaking news, in-depth financial articles and financial world updates coming in on your fingertips. In fact, you can download the app on your phone itself from either the App Store or the Google Play Store and get all the news and updates that you see on the channel on the go in real time.
Welcome back. Well, for the markets, just want to point out that while it might be quiet on the frontline indices and the indices in general, even the mid-cap index, there are specific stocks which are in focus on account of news. So maybe we can just pull up Sun Pharma. They've in fact announced that they will be tying up with a company for licensing for a specialty product, Fibromin, which is an immunotherapy drug. So they have the rights to commercialize Fibromin globally. So that's the reason why that stock is in focus. We also have Zydus, which is in focus. That is because they've received an establishment inspection report along with a voluntary action indicated status for their manufacturing facility in Ahmedabad. So that's the reason that stock is seeing a little bit of a marginal gain at this point in time. But nonetheless, the other one which is really moving is Tech Mahindra. It's one of the top gainers on the Nifty. And this is following what is a bullish report come in from CLSA. Nimesh is here with the details on what the brokerage is saying. Nimesh.
That's right, Ekta. You know, the stock is buzzing in trade on the back of a big upgrade coming in from CLSA. Just before the earnings season, there's an upgrade on Tech Mahindra to an outperform from hold, and CLSA has raised the target price to 1749. Now, they believe that the EBIT margin expansion is pretty much underway, but the next milestone would be the order book, and that's something to try going forward. However, the broad-based growth is only going to come in FY26. The growth will come from three large verticals, which is financial services, healthcare, as well as manufacturing. They will have the maximum amount of growth for Tech Mahindra going forward. Now, EBIT margin target of 15% by FY27, that's the stated ambition of the company. Looks like it's pretty much achievable according to the City note, and they believe that the recent ramp up in EBIT margin can provide further scope for re-rating. So, on back of all this, a big upgrade to an outperform on Tech Mahindra now, and they've raised the target price to 1749 versus 1650 earlier.
Take that point, Nimesh. Thanks a lot for that. You've been a good luck charm for not only Tech Mahindra, which is the top Nifty gainer, but also Team India, where, you know, Jasprit Bumrah has just gone ahead and taken the last wicket of Bangladesh, setting us up a target of just about 96 to win this test match. What a game this has turned out to be. 2.5 days of rains, and now we're staring at a result which is an India win.
Well, you know, and in fact, this will also be significant from a point of view that for the World WTC, we'll have another points to add, right? And that's going to be significant. I think that's the reason why we played so aggressively in the first inning.
take that point, and what a game it was. Thank you, Nimesh, for joining in, telling us about TechM and TestM also. With that, let's talk about another stock which is buzzing around. That's Angel One. A broking firm, the broking firm, Angel One that is, has revised brokerage charges for both cash and equity delivery transactions. This after there were revisions of charges coming in from the exchanges itself. So no loss of margins out here. In fact, the fact that they're able to, pass on through these margins is something that the street is excited about. Up 5% on that stock. Vamakshi joins us with more on this. Vamakshi.
Well, absolutely, Mangalam. That's right. Angel One has revised its brokerage for cash and equity delivery transactions. The brokerage charges that will be levied are at flat 20 per order or 0.1% plus GST, whichever is lower per executed order. The minimum brokerage of around 2 rupees will be levied. Keep in mind that Angel One earlier did not have any brokerage for cash delivery transactions, and overall it was offering the lowest brokerage rates and lower other charges as well as compared to some of the other discount brokers. Now this revision in charge comes after NSE and BSE both revised their transaction charges with effect from 1st of October. NSE and BSE have now moved away from the slab-wise fee structure earlier and have now moved on to true-to-label charges, which is a flat transaction structure. Angel One earlier in July told us that on account of the shift to the new fee structure, they are expecting an impact of almost 8% to come in on their revenue. But this 20 rupee per order of the brokerage that they're going to charge could help them mitigate some of the impact that could come from loss of revenue from this particular source. But it will be important to watch out for the impact that could come in on the volumes generated. So overall, positive for Angel One. They're trying to mitigate the impact coming in from the revision in transaction fees.
Okay, all right, Vamakshi, thanks very much for that. Angel One, the 52-week high stands at around 3,900 odd rupees. So let's see whether it makes its way closer towards that level, currently at around 2,687. Just want to point out that from the same theme, we have IIFL Securities, which has jumped around 7 odd % today. So that stock has gained around 152% this year and is seeing a good amount of traction in today's trading session. We'll take a short break, but up next we'll discuss technicals. Sachidanand Uttekar will join in with his calls.
Welcome back. You're watching us here on Halftime Report. The indices are all flattening out right now. We have the Nifty Mid-Cap Index, Nifty Bank flattening between green and red. So good time to, talk about the F&O space, largely because we also have the dual expiries today, Fin Nifty and Nifty Bank. Nifty has been dragged lower by a couple of these heavyweights. So if you look at the contribution chart, you'd see Reliance being the top dragger on the Nifty. On the way down, though, important to track the 20-day exponential moving averages on both the Nifty Bank as well as the Nifty, which may prove to be good supports. The Nifty Bank actually went very close to the 20-day exponential moving average today. From there, it's seen a bit of a recovery. For the Nifty itself, the 25,900 call as well as the 25,750 put have both been active. So 25,900 call telling you that levels as we move towards 26,000, there may be some supply coming in. 25,750 put telling you that levels closer to 25,700 thereabouts, we will see supply. We will see support, and that's exactly the range that we're looking at. So on the dual expiry, the Fin Nifty and Nifty Bank expiry today, for the Nifty Bank, 53,000 call has the maximum amount of open interest along with 52,800 put. So this 200-point band is what the street is hoping for the Nifty Bank to trade within today. And for the Nifty Financial Services, it's an even narrower band, 24,600 call and 24,500 put. Both of them extremely active. Where are we? 24,478. So here is where the support for the Nifty Financial Services is likely to come in. One stock I'm watching out for is Birlasoft, may enter F&O band. Remember, yesterday 4 stocks went into F&O band, and today Birlasoft is one of the likely contenders to enter too.
Okay, all right. Thanks very much for that, Mangalam. Well, we have Sachidanand Uttekar joining in to discuss the technicals of the market now. Sachidanand, hi, welcome to the show. Well, quiet day on the indices. Maybe it's pre-holiday and after, consolidation after that strong sell-off that we saw yesterday. What's your call? Both stocks as well as index.
Good afternoon, Ekta. Good afternoon, Mangalam. I think clearly the focus is on Nifty Bank right now, and already Mangalam has already shared the data points. But if you look at from a price perspective, the Nifty Bank is holding well above that 5-week exponential moving average support, which is placed at around 52,790 kind of a range. And if you also look at the 20-day exponential moving average, is also placed somewhere close to that. So we don't see the Nifty Bank, sliding lower from here on. So probably there could be a recovery in the second half. From a trading perspective, we may see a swing today itself towards 53,400 on the higher side, and that's why we are recommending building long positions here. Even if you look at the Nifty as well, for the last 4 weeks, the Nifty has been progressing well in a rising channel formation. The channel pattern support is somewhere placed close to 25,750 thereabout. This is where the current placement is, and that's why we are also recommending some support and some stability near this particular level. We are looking at a quick recovery towards 25,910 levels in a day or so, and a further rally towards 26,030 from an expiry perspective. So we are bullish when it comes to both the indices.
Okay, and stocks?
Well, on the stocks front, LTI Mighty is something which we have recommended to our clients. Now, if you look at the daily chart structure, the stock has displayed a good support base near its 20-day exponential moving average, which is placed somewhere close to around 60 to 20. The data is indicating a short squeeze. It has already spent a good amount of time within the band of 6100 to 6300. What we are looking at is a kind of a triangle formation on its 60-minute scale, which is about to mature, and that's why we are looking at some very strong momentum play unfolding here. 6460 is the probable target for this particular stock. The stop loss can be placed at 6,200 on the lower side on a closing basis. The other stock which is on our radar is ABB. The structure has been doing very well. For the last 9 weeks, the stock was consolidating within a particular range. Now, on the daily scale, it has already displayed a bullish flag formation, which is again a continuation pattern indicating a price target somewhere close to around 84.75. And that's why we are recommending building long positions here, keeping a trading stop loss somewhere close to around 82.20.
All right, Sachi, thanks a lot for that. Meanwhile, we have some data coming in from Ashok Leyland. Total sales at 17,233 units, largely in line, mildly below the CNBC-TV18 poll of 17,433 units as well. The total sales are down 10% year on year, nothing that the street wasn't expecting. So as a result of which, the stock hasn't moved much. In fact, it's up around 1.5%. We also got some numbers coming in from Eicher Motors for Volvo, and that's for the CV sales. They declined, but for Eicher Motors as a stock, the important data point to watch out for will be the Royal Enfield sales. So we'll keep an eye out on these numbers as they do come by. But
It's
let's
up
move on.
5.7%. The total CV sales are up
5.7%
5.7% to 7,600 odd units. So that's not done too badly, but like you mentioned, Royal Enfield will be the key thing to watch out for.
Would be important to watch out for. But let's talk about an important news piece that came by on Saturday. India allowed the exports of non-basmati white rice exports as inventories in the world's biggest exporter of the grain surged, and farmers are now set to harvest a new crop in the current weeks. How does that impact the listed players? Well, we do have Akshay Gupta, who's the head bulk exports at KRBL, now joining in. Thanks a lot, Akshay, for joining in. The big question is, one, what proportion of your exports come in from non-basmati? And now that, the ban has been lifted, the export duty has been reduced, what would it mean in terms of you being able to capitalize on this opportunity? How could the incremental volumes pan out from here?
Right. So, yes, for us, actually, 95% of our exports are mainly for basmati rice. So it's only 5% exports that we do of non-basmati in our own brands, and that is regional varieties such as Sona Masuri, Honi boiled, which is to the Indian diaspora living abroad. So that is what we do in non-basmati rice. But given that the ban is lifted now, there are obviously some opportunistic businesses that keep coming in for bulk trade to countries like West Africa, China, Philippines, Indonesia. So we are obviously looking for those businesses to come up. And if there's good lucrative opportunities there, we will we will grab those opportunities.
Could you quantify the size of opportunity here? Because you said these are opportunities that may come by. They're not substantial, but I'm sure they're tactical. Every once in a while you'll get them, right?
Right. So just to give a perspective, last time, about 2 years back, before the ban was there, we did about 100,000 tons of broken rice to China, and that was a completely opportunistic business. So it was valued about 350 crores. So a business about 100, 200, 300 crores can be done if pricing is good and if we feel that we are getting good margins, then only we delve into those businesses.
Okay, so Akshay, preliminary, any kind of opportunities you see could be a possibility at this point?
Immediately, we're branded regional rice sales, which we do to countries like Europe, USA, and the Middle East, which is mainly to the Indian diaspora living abroad. So that would account for like 5% of our overall exports. And then bulk business could be about 100, 200 CR, but given the opportunity. I mean, that can not be commented now, but yeah, given the opportunity, maybe after a couple of months, we could do that business as well.
Okay, all right. So there could be a possibility of a windfall opportunity which might come up, but as of now, you don't have clarity on that.
Right.
Okay, all right. The other thing is that the MEP on Basmati was removed in mid-September. What are your average realizations? We understand it's above the MEP in any case. And
Correct.
what kind of opportunity is it presenting to you all?
So MEP, as we mentioned last time also when we had an interaction, MEP does not have a direct impact on our regular export sales because we are mainly into the branded segment and our average price is above $1,200. So it doesn't affect us. But now that the MEP is removed, again in that space also we get an opportunity to do bulk basmati business, such as tenders to certain Middle East countries where they do tenders for food security. So we can delve into those businesses as well. Again, so the lower segment is mainly a business where we see opportunity. If we see a good margin coming in, then only we do those businesses. So it's hit or miss business.
Final question then before we let you go, Akshay. Your first quarter exports were down 54%, close to around 250 crores is what you did. This also was due to some distribution challenges in Saudi. Wanted to understand if those challenges are behind you and what kind of export run rate are you likely to see over the next few quarters?
So the entire 54% was not because of Saudi. So there was some businesses done to Iran as well, which we might resume given the MEP is lifted. So I think we can cover up some of those exports. And then the Saudi part, it's still undergoing. It's still not resolved. It might take another 3 to 4 months for us to get back on track with that.
So this year, how much exports are you targeting?
I cannot give you a number, but I think we will see a good increase compared to last year. I think we'll cover some ground there.
Okay, all right, Akshay, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that stock is up around 0.5% at this point in time. They are expecting that lift of export bans on non-basmati exports, not basmati rice, will eventually help the company, but they can't quantify the opportunity at this point in time. We'll take a short break. We'll get you more on the markets. A lot of stocks in focus on the other side. Welcome back. Well, for the markets, it's quite quiet, but just want to point out Mankind, which is one stock in focus. It's up around 0.3%, but there's a development which has taken place where the company has executed a business transfer agreement. They've transferred their over-the-counter business to a wholly owned subsidiary, which is Mankind Consumer Products. Remember that this basically includes all of their consumer brands such as Manforce, Health OK, Prega News, Acne Star, and FY24 revenue was around 700 odd crores for this particular business. They say it's a broader strategy to enhance focus on the consumer business. Well, some more details on stocks specifically. Century Textiles is in focus on account of some news. Birla Estates has sold 95% of inventory for one of their projects in just 24 hours of a launch. So that's the real estate boom that we're referring to. But nonetheless, the SEBI at its board meet yesterday announced a slew of measures. Shivani has all of the details. She joins in with more.
Well, yes, a slew of measures were announced late last evening by the market regulator after the board meeting. Many of these announcements were expected as well. SEBI announced that the stockbrokers must implement a UPI block mechanism or 3-in-1 trading by February 2025. Another important thing for the market is that the regulator has expanded the T+0 settlement cycle to the top 500 market cap stocks. Another important thing that was expected is that SEBI has announced a faster process for rights issues, now completing within 23 working days. Promoters can renounce their rights to specific investors, enhancing flexibility. One of the things that everyone was watching out for, SEBI has also launched a new asset class bridging the gap between mutual funds and portfolio management services, the PMS, aimed at tackling unregistered schemes and providing investors with flexible regulated options. The minimum investment is set at 10 lakh rupees and the safeguards include no leverage and cap derivative exposure. On the mutual fund side, the new MF Lite framework has also been announced. The new norms ease compliance for passive funds, allowing asset managers to opt for relaxed regulations or hive off passive schemes. The regulator has expanded the definition of connected persons under the insider trading regulations as well, now including firms and individuals sharing households with connected persons that were defined earlier. This is one of the things that is seeing mixed reactions from the experts. Interestingly, no announcements on as expected on the F&O segment as of now. Back to you.
All right, Shivani, thanks a lot for that. Let's talk about the Indian markets and the view ahead as well. We had an expert, Sunil Kaul, APAC equity strategist at Goldman Sachs, joined us yesterday saying that there could be continuation of a tactical rally in China. And on India, he did say that they have a target of 27,500 on the Nifty going forward. Flows could ebb in India. But that's not because of China. Listen in.
There could still be a bit of tactical rally continuing in China. Positioning from what we are hearing both from long onlys but also from the hedge funds, long short managers, is that things have kind of gone from positioning in the bottom half of the decile to like 14-15% in terms of the overall positioning, but there is still some more room for that to improve. So I would say I think you could still see next couple of weeks China momentum continue. The critical thing would be to see whether there is any improvement in the higher frequency data for the month of September, which comes out in the middle of October. Sense is that India probably still stays resilient overall. You might see a bit of weaker foreign flows, which is not just because of China. You also have US elections coming up. You have state elections in India. So there's lots going on, because of which you could see kind of tepid foreign buying in general. Our view on the overall sort of India positioning side of things has been that overall foreign positioning is still decently light in India. We still feel confident that you could see around 14% earnings growth over the next sort of 4 to 6 years, which sort of should drive markets higher, even with some multiple derating from current levels. So you could still see decent sort of early double-digit returns in the market on a sustained basis. We still have a 27,500 target on Nifty, and we are overweight the market in the context of the region.
Okay, all right. So that's some opinion, but the stock in focus is Nalco, which is surging in trade today on the back of positive commentary from Kotak. Nigel has more on this.
Well, that's right. Kotak has done a U-turn of sorts because they have upgraded the stock to buy from around sell, and they've gone ahead and they upgraded the stock price to around 235, the target price, from around 160 odd earlier. Now, a couple of reasons are played out. They've gone ahead and increased their EBITDA estimates for the next few fiscals, and they've also giving it a higher multiple. Now they're giving it a multiple of around 7. Earlier, they were giving it a multiple of around 5.5 times. The few factors that they have highlighted. One is they have gone and upgraded their estimates for both aluminium as well as on alumina. Now, on alumina, they've noted that globally there's a bit of a deficit that's playing out, which is playing in favor of Nalco. They also highlight on the cost side that they're getting a fair bit of their coal from captive sources. And because of that, they've saved cost in the past fiscal, they'll save this year. And from here on, they'll continue to see cost savings. So that's good news for them. And finally, the street has always been concerned about the expansion plans, and the alumina refinery expansion has been delayed for very, very long. Now they're factoring in higher volumes coming in from the second half of FY27. So they have upgraded their estimates on the price outlook. They have talking about the cost savings, and they're also talking about the expansion. Put all this together, Kotak is positive on Nalco, which has set the stock up and about.
All right, Nigel, thanks a lot for that. Up almost 7% today. Let's focus on the sugar space now. Manisha Gupta has caught up with Balrampur Chini's Avantika Saraugi on the sidelines of India Sugar and Bioenergy Conference. Spoke about the trends in sugar industry, developments in bioethanol, and the recent government initiatives that came by as well. Let's hear out an excerpt of that conversation.
I think the minister in yesterday's address covered all our pain points, whether it was MSP, whether it was ethanol pricing, whether it was exports at the right time. I think policy is aligned for nation building as well as industry building, I would say, and we are very hopeful for a good year and many more years to come.
As you were telling us that 30% of your mix is right now coming in from bioethanol. How are you looking to increase that? Are you looking to increase that? And also, how is bioplastics making an inroads?
Well, the capacity we have right now is 1,050 KL. For now, we are focusing our capex on the bioplastic project, which is 2,000 plus crores. So in this coming 2 years, I don't think we will do any significant capex on ethanol. But after the bioplastic project is completed, then we might look at it again, depending on where we stand. The bioplastic project, now coming to that, will be commissioned in 2026 and could have a revenue potential of around 1,700-1,800 crores. And that would probably put us at more than 50% mix of green products in maybe year 27-28, FY 27-28.
How big is an industry in sense of bioplastics, and what would your share be to begin with, and what kind of investments are you making in that?
So we are a drop in the ocean. India uses about 10 million tons of plastic every year. Out of this, upwards of 4 million is imported, and around 5 million is actually single-use plastics. So the government has put in a ban on 19 items of the single-use plastics, and that is actually what our product is very good for. So the headroom, I would say, even if we just talk about replacing maybe half of the single-use plastics, is around 2.5 million tons, while we have announced a capacity of only 75,000 tons. So the headroom is absolutely insane. Plus, if we talk about India being a biomass-rich country, which it is, we have much more biomass than we can valorize, really. So it could become a global hub and a very good export opportunity coming in the future. So today, bioplastic markets are about 1% of total plastic markets. This is global. India, as you know, is almost nothing. So we hope to if we want to go towards net zero, we will have to start setting some bio targets for every sector. And we hope if we can even grow to 5% in the coming few years, it would be nice.
So one final question, and while of course this is coming back to bioethanol and prices therein, which the government would increase in the next month or so, what pricing would you say will work best for your profitability?
I mean, the highest pricing will work best, of course. But if we talk about what we think will come, nobody can really put a figure to that today. I think they are cognizant of whatever has happened. All the cost of productions, they have the best professionals, calculating, and they're taking inputs across industry, various institutes and everything. So whatever they come to should hopefully be healthy enough for the industry to grow efficiently and comfortably, considering the amount of investments that have gone in over the last 5 years.
Okay, all right. Well, that's the word coming in on the sugar space. Well, for the markets, we're absolutely flat at this point. The mid-cap index just about consolidating. The advanced decline ratio is still holding on the advancing side, so that's the positive which stands out. In terms of stocks gaining from the Nifty space, we have TechM, which is really ruling the roost, so it's up around 3-odd%. M&M, UPL, Infosys, all of them following suit in today's trade. From the broader markets, a couple of stocks that stand out. We spoke about Nalco, we mentioned IIFL Securities, but stocks such as RPG Life, which is up around 5-odd% at this point in time. IndusInd, which is a recent listing, is doing well today. It's gained around 25% this month itself and is up around 5-odd% today. Glenmark Life too is having a good session. It's up around 67% this year. Paytm, up around 4% today as well. So a lot of varied stocks seeing some amount of traction on the upside. We'll take a short break, come back with more. Stay tuned.
Welcome back. Even as the frontline indices are moving between red and green, more red than green right now, we have a couple of these mid caps which are doing extremely well. So from the broader markets, we have Naveen Fluorine. The intraday chart comes up for you. The stock's been, tearing away on the way up right now at the high point of the gain of almost 4.5%. And another company that's doing well is Granules India as well. So Granules too has recovered about 3.5% from the lows and is standing at the high point of today's trading session, telling you that despite the consolidation in the markets, a lot of these individual stocks buzzing around. Paradeep Phosphates, for instance, from the broader markets too, come up for you right now, sitting at near double-digit gains as well, following the gains that we're seeing in a lot of these chemical spaces as well. So that stock up and about. Take a short break, come back. We have Business Lunch taking all the market action ahead.